Bring up the situation with Evergrande in China. There were a lot of concerns we'd see contagion, and that has yet to develop, if ever. Why have we not seen contagion thus far?
Well, I mean, we haven't seen, a complete, unraveling of that situation yet. So I don't know that we've seen the first real domino to fall. And so that's why the others haven't tumbled as well. But, there's a lot of debt throughout the economy. It's not just with Evergrande. I mean, they've got more than most. But this problem is widespread. It's not just in China. It's all around the world. It is the byproduct and the consequence of these reckless monetary policies being pursued by the world's central banks. And those policies are still in effect. And I think everybody knows, to the extent that there is a big problem at Evergrande, they're going to sweep it under the rug by burying it under mountains of freshly printed paper money. So I think the moral hazards are already there. And I think while these headlines potentially move the markets in the short run, everybody knows the game plan. And nobody really fails. There are no adverse consequences when you gamble and lose. Everything gets socialized. Central banks come to the rescue. That is the problem with the system. And so, again, where this is going to manifest is going to be in inflation. You're going to see bigger increases in consumer prices than the ones that we're already experiencing, and ultimately a collapse of this fiat monetary system that is based on the dollar as a reserve, and meaning the most severe consequences will be for the dollar and for American citizens who depend on the dollar.
Okay, I want to stick with China for a bit. Their condo prices in some cities are now 57 times the average annual income. And that's even more than at the height of Japan's bubble economy, where condos were 18 times the average annual income. But in the U.S., we're seeing the same trend, where the recent S&P CoreLogic Case-Shiller Composite Index gained some 19.1% in the past 12 months. Are we going to see 2008 all over again, with the housing market bubble, credit bubble, equities bubble, and the everything bubble looking to pop?
Well, no, I think it's going to be much different and much worse this time, because I think the Fed will continue to blow air into these bubbles for fear of a repeat of 2008. So it will continue to try to sustain the everything bubble. But in the process, it must destroy the bubble in the dollar, because the dollar has to be what's sacrificed to prop everything else up. And so then, unlike 2008, where the dollar went up, this time the dollar is going to come crashing down. And so it's not just going to be a financial crisis, but a currency crisis, a U.S. dollar and a sovereign debt crisis, which is a much greater crisis with far more dire consequences for Americans.
And with all this missteps from the Fed, the way it has really and truly backed itself into a corner, putting our livelihood, savings, even our wealth at risk, why are we not seeing as much love for gold as we might have seen in past times?
Well, there's a lot of misunderstanding out there. Most of the big money investors still don't get the gravity of the situation. They still have confidence in the Fed and other central banks. They still think inflation is not a problem, and if it were, the Fed would quickly put out the fire in a way that somehow won't even be harmful to the economy, the stock market, real estate market, the federal budget. So everybody's living in fantasy land. And then you also have the idea among a lot of professionals that, we don't even need gold anymore because there's Bitcoin or other cryptocurrencies. And even though they're not buying either, right? They're not buying gold or Bitcoin. They just assume that other people won't buy gold and they'll buy Bitcoin. And so that is helping to tarnish gold's image right now, or steal some of its thunder, in that you've got, the specter of digital gold taking its place. And of course, that's a bunch of nonsense, and that's never going to happen. But I do think that is helping to, cloud people's judgments as to, what they should be doing with gold. But I think when everybody is blindsided by the events that are going to unfold, when inflation really rears its head in a much bigger way, and the Fed does nothing about it. I mean, the Fed right now is bluffing that it's got these tools, and if inflation ever really becomes a problem, it's going to use the tools. There's no way it's going to use those tools. If it was going to use them, it would have already done it, because inflation is already a problem. They're ignoring the problem because they can't do anything about it. But the one thing they can't do is admit that they can't do anything about it. So they pretend it's not a problem so they can maintain the fiction that if it were, they would do something about it. Well, when that fiction is exposed as a lie, that's when you're really going to start to see the gold price taking off. And I think even more important than just listening to what I have to say, but it's following the recommendations that I'm making on what you need to do to protect yourself from this coming currency crisis, dollar collapse, to properly position your portfolios ahead of time to not only protect yourself, but actually to profit from these events as they transpire. In fact, the reason that there's such a great opportunity for profit is because so many assets are now mispriced, because the vast majority of people have no idea what's about to happen. And so that opens up this huge opportunity for profit because assets are mispriced. The things that we're buying are too cheap. But once the world recognizes what we've already figured out, they're going to rush to put on these same trades, and the prices of what we bought cheap will be much higher. And that is historically how you make a lot of money. Figure out where the consensus is wrong and then bet against it. You know, we did the same thing with the subprime market, betting against that. Well, I think this is going to play off with an even bigger profit than that trade did. There's going to be winners and losers. I mean, American consumers are going to be among the biggest losers, but there are going to be a lot of winners. And you want to align yourself with the winners by properly aligning your portfolio and your income streams in advance of that. Because it's not just Americans who are going to be affected. Everybody will be affected, and everybody needs to know how to prepare and make sure they are prepared in advance.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
What to do in such a situation? Inform yourself and keep your financial education strong. We from the Compact Group offer our loyal subscribers a free educational portal with first-hand monetary, financial, and economic knowledge. Enter our invite-only Insider Club by clicking the link below. You will get access to first-class information far earlier than the rest. We have prepared a special deal for all our members where you can access a giant pool of Robert Kiyosaki's financial wisdom for just $1. To find out more, simply click the link below and join our Insider Club absolutely free. But there is more you can and should do. Build up several streams of income. More and more people realize that they have to take their future in their own hands, but they don't know how and where to start. We from Compact offer our Insider Club members unique opportunities. Strengthen your financial muscle and get the edge. Click the link below. Become part of our free Insider Club. No financial obligations. But there's one important thing you have to know. You have to become active. So do it now. Become active and see you on the other side.